Thank you very much. Firstly, I would like to thank Bursa Malaysia and Macquarie for having me here today. It is always a pleasure to speak on a topic that is close to my heart. Next slide, please. I seek your kind indulgence for me to briefly introduce Co-op. Co-op was incorporated in 2007 and our current fund size is over 150 billion ringgit. Co-op's main objective is to manage the fund established under the Retirement Fund Act 2007 towards achieving optimum returns on its investments and in the long run to assist the federal government in financing its pension liability. We have three main key functions. The first one is management of contributions from the federal government, state bodies, local authorities, and other agencies. Second is administration and management as well as investment of the fund in equity, fixed income securities, money market instruments, and other forms of investments as permitted under the Retirement Fund Act. And last but not least, the function that we took over in starting 2016, management and payment of pension. So in terms of our investment portfolio, we have diversified our investments in both domestic and international markets with investments in asset classes that I mentioned earlier, but also including private equity, infrastructure, as well as property. Next slide, please. So Co-op's ESG journey was triggered by our belief that investing in companies with good ESG practices can contribute towards delivering sustainable, risk-adjusted returns and therefore enhancing shareholders' value in the long run. So our journey with sustainability first started in 2009 when Co-op began practicing proactive shareholders activism by monitoring our investee companies' corporate governance practices as well as issues related to companies' responsibilities towards social and environmental aspects. Since then, we have embraced and we have integrated ESG as part of our business practice by establishing asset class specific as well as corporate level ESG guidelines. And to further strengthen our ESG beliefs, we also became a signatory to UN-backed Principles of Responsible Investment, PRI, or better known as PRI, back in 2018. As a signatory to the PRI, we have integrated ESG into our investment analysis and decision-making processes and further act as an active owner who seeks appropriate disclosures from the entities that we invest in. Moving forward, we aim to further enhance Co-op's ESG integration by adopting climate-specific related investment beliefs and integrate climate change into our investment decision-making process. At Co-op, we do realize the importance of our role as a key investment body, and we are therefore fully supportive of the government's green agenda. The recent finance minister's call for financial institutions and the private sector to complement the government's effort in assisting the nation's overall preparedness to manage the impact of the pandemic and further foster sustainable growth further solidifies our efforts on ESG. In August of this year, the government rolled out the Pekukuh program, which is aimed at reimagining the role and renew the capabilities of Malaysia's GLICs, where there would be a rebalancing of focus between financial returns and socio-economic deliverables for sovereign wealth funds. And during Budget 2022 announcement, the government also renewed its commitment to strengthen development so that growth remains sustainable and inclusive, with emphasis given to the sustainability agenda, bridging economic gaps, fiscal consolidation, and revenue sustainability, as well as supporting public service delivery. Next slide, please. Sustainability is a salient principle for us due to our fiduciary duty to fulfill the mandated role of generating long-term sustainable returns for our stakeholders, i.e. the Malaysian pensioners. ESG is no longer good to have, but is fast growing into a requirement for all investors and businesses. As part of our commitment to sustainability, we incorporate ESG into the management of our investments and in all of our stewardship activities. Reputational risks have a two-pronged impact to both investee companies as well as the investors. So over time, we have seen how ESG factors have affected the consumers' preferences for products and services in the market. Consumers are turning away and boycotting products that are, for example, polluting the environment, causing deforestation, or engaging in forced labor in their supply chain. In other words, these companies that have poor ESG practices do pose a reputational risk to institutional investors. Further, we also need to be mindful of our stakeholders' concerns as they now have greater awareness on the dangers of climate change, effect of poor governance on company, and the impact of social issues which have compounded during the pandemic. We could clearly see how swift markets react to companies having less than palatable practices. Our stakeholders would not want the fund to be associated with companies that adopt poor ESG practices, definitely. So for pension funds such as Co-op that are large asset owners with long-term investment horizons in diverse industries, ESG factors can have a direct impact on investment returns. For example, under the environmental pillar, a company's ability to address the market's transition to low carbon and deforestation free economy, including managing risk pertaining to stranded assets, will affect the financial expectation on investments in these companies. We believe that our investee companies, which are exposed to high carbon, high cost projects and projects with high environmental, social, and governance risks, are more vulnerable to the risk of stranded assets than companies that are actively preparing for a zero carbon transition. So institutional investors and sovereign wealth funds such as Co-op also have a responsibility in playing a stewardship role in the market owing to our large domestic presence. It is our duty to support national economic development plans and the capital market activities as we are able to make a difference by redirecting capital within the market space towards the preferred investments. Next slide, please. So at Co-op, we stand guided by our ESG guideline for equity and Co-op's voting guidelines. We are in the midst of reviewing the voting guidelines for the third time to include more ESG considerations and incorporate the latest regulatory requirements. As an active shareholder in equity, we believe in engaging closely with our investee companies. Our approach towards ESG is very much driven by engagements which aim to make improvements in the capital market. So we regularly engage with our investee companies in order to guide them to become exemplary in their ESG practices. We attend AGMs and EGMs to exercise our shareholders' activism and also conduct shareholders' engagements with our investee companies to discuss both financial and non-financial matters. Co-op also organizes ESG engagements, ESG specific engagements with selected companies from our portfolio to deep dive on ESG focused discussions and to address specific areas of concern. We are increasing our analysis on our investee companies' adoption of the environment and social pillars from this year onwards, as the pandemic has shown us the relevance and the importance of these two pillars in particular. On top of our engagements, we have developed our own ESG rating internally, which allows us to identify the best and the worst performers from an ESG perspective within our portfolio of companies. And the intention is to have the rating, of course, improve as the portfolio grows. We strive to place ESG beliefs at the very core. One of our expectations for our investee companies is to make better disclosures in line with Bursa Sustainability Reporting Guide. This is one of the challenges which investors globally are facing today. The lack of ESG data hinders meaningful comparison within the market, and that is why we constantly push this in all of our engagements. We also recommend all of our investee companies to assess potential ESG risks that the company might be exposed to and create a long-term strategy that adequately prepares the company to address these risks. So one of the biggest threats that we face today is climate change. There is plenty of discussions on this happening everywhere, especially with the recent conclusion of COP26 in Glasgow. Malaysia stands to be impacted as well. In fact, according to Banegara's data, as of November 2019, 11.7% of assets held by financial players in Malaysia are in sectors potentially exposed to climate change. So in line with that, we would like to see our investing companies being more prepared in facing the future. A good place to start would be to properly assess these risks and to set sustainability targets that are measurable, that will eventually show investors that they are prepared for the future. Next slide, please. Here, I would like to expand a little bit on the challenges that I mentioned earlier, which is sustainability related data. Investors certainly play a big role in the transition of the global economy, including Malaysia, towards a greener future. But we cannot achieve these enormous tasks alone. Businesses play a crucial role as they provide non-financial information, including sustainability-related disclosures to investors. We have observed that more and more investors are taking a disciplined and rigorous approach in evaluating companies' non-financial performance, which can help explain the increasing importance of sustainability-related disclosures to investors. Incorporating an ESG lens into investment decisions can help identify a more robust set of risks and opportunities beyond the scope of traditional financial analysis. Sustainability-related disclosures that show a company's preparedness for the future allow investors to accurately weigh an investment opportunity. For instance, Malaysia is exposed to both acute and chronic physical climate events, which would impact the operations and market of all companies, regardless of the industries they are in. Through sustainability disclosures, investors are able to gauge and understand how well these risks are being managed. A comprehensive ESG disclosure that includes an organization's environmental stewardship activities, social responsibilities towards its employees and the community it operates in, as well as corporate governance, I believe will soon become a distinguishing factor for investors when picking an investment opportunity. All these components are associated with risk premiums that can affect investors' asset allocation decisions. Next slide, please. Various investment opportunities are taking place in Malaysia, and it may aid our transition towards a low carbon future. There is a growing number of zero carbon technologies globally as well. One of the technologies is renewable energy. In 2018, Malaysia announced that it had set a target of 20% renewable energy in its generation mix by 2025. So to achieve this target, it is estimated that Malaysia will need approximately 33 billion ringgit worth of investments in renewable energy sector. Energy efficiency promises great potential too, as gains in energy efficiency would allow the country's increase in final energy demand to remain marginal despite healthy economic growth. So based on the announced pledges gathered by the International Energy Agency, global electricity generation by fossil fuel sources will be phased out and replaced by clean energy sources from nearly 40% in 2020 to more than 80% by 2050. And more recently, investors' interest in energy transition was also supported by renewable energy's sizable outperformance over fossil fuel during the pandemic. Varied renewable generation also gives rise to underlying opportunities in energy storage, whereby selective investments can generate commendable returns. Quark ourselves, we have started to invest in renewable energy a few years ago. Vantage Solar is a Luxembourg-based renewable energy company which owns the fifth largest solar platform in the UK, comprising 365 megawatt worth of portfolio, consisting of 24 operational solar farms. Quark jointly holds this investment with Tenaga International, Sinar Berhad, who has the majority stake. We are also a shareholder of TNB, where we have been monitoring closely TNB's increasing involvement in the renewable energy sector, which will reduce its dependency on coal power plants. This investment is a key milestone in Quark's growing commitment to ESG and has enabled Quark to take part in a pathway towards the implementation on transformation of the global energy sector as it shifts from fossil-based to zero carbon. In conclusion, despite various concerns relating to ESG, it has been proven that ESG can in fact contribute towards investment returns. And for investors such as Guap, it is a material issue that we place at high importance. There is much potential in this space. Sustainability awareness among various stakeholders is increasing, and that is definitely a positive. NGOs and shareholders alike are demanding more accountability in how investments are impacting our world. In Malaysia, specifically, important frameworks such as climate change and principles-based taxonomy have already been published, while other sustainable investment frameworks by Securities Commission are expected to be released in the near future. All of these are driving Malaysia towards the direction of a more sustainable nation. On a global level, we are seeing many sustainability frameworks being introduced, and in some countries, sustainability-related disclosures are being made mandatory. At Quad, we strive to play our part and contribute from an investor's point of view in supporting our investee companies' transitions to a low carbon and climate resilient economy. I believe this is important as collectively the financial sector and the investor community can help nations and the global economy to achieve our environmental as well as SDG or Sustainable Development Goals targets. I would like to end on a positive note by stressing that Co-op as an asset owner, we aspire for our investee companies to harness the growing opportunities in zero carbon sectors. Thank you again for inviting me to speak at IMKL Series 4. Back to you, Mr. Moderator.